Sorry for the interruption, guys. There's a problem with the software. So let's continue with our problems. Just solving problem number 10 out here. X Limited spent 1 crore towards promotion of its fashion show by various on-road shows, contests, etc. After that event, it realized that the brand name of the entity got popular and resultantly subsequent sales have shown significant improvement. It is further expected that this hike will continue to affect over the next 2-3 years. How does the entity account for the above cost incurred on promoting such a show? So this 1 crore is particularly an advertisement cost, and he's asking you whether you can capitalize this advertisement cost or not. In logical sense, if you remember, we have seen multiple such questions on advertisement where we said promotion cost is not eligible to be capitalized since we had a competition. We said it is not eligible to be capitalized since it is not identifiable as a separate asset. Clear? It is not identified as a separate asset. For you to satisfy the condition of identifiability, number one, it should be separable, or it should be predominantly identified as a tangible or intangible asset. Here, the possibility of separability is not possible because it is not possible of being separated and sold or exchanged or licensed or transferred. Neither it is exchanged through neither it is acquired through a separate legal right. So therefore, identifiability concept is not being met, and the advertisement expenditure is ineligible to be capitalized as per Ind AS 38. Straightforward, we can charge it off to P&L. Write the answer for that. Question number 10. What is the first statement that we have to write? First, look at what is the identifiability. To be recognized as an intangible asset, the asset should meet the definition of identifiability When does it meet the definition of identifiability? For it to be called as identifiable, it should be separable. When do you call it as separable? When it is acquired through first one, when it is acquired through separate legal rights. When it is acquired through separate legal rights, or it is capable of being separated and sold, licensed, or exchanged, or even rented, then only you will say that the intangible asset is identifiable. Or if in case, if it is inseparable, it should be identified based on predominant nature. It should be recognized based on predominant nature. is recognized based on predominant nature. Here, the advertisement expenditure neither meets the definition under separable criteria, nor it meets the definition of identifiability under inseparable criteria. Therefore, the advertisement or promotion or marketing expenditure is ineligible to be capitalized. We can continue to say that advertisements, marketing or promotion expenses does not meet the criteria of identifiability. Does not meet the criteria of identifiability. Therefore, such expenditure is ineligible to be capitalized. Ineligible to be capitalized as intangible asset. Hence, it should be charged to P&L. Hence, it should be charged to P&L. Now, some of you might have a doubt, sir, is it necessary for me to explain the entire criteria of identifiability as laid down under Ind AS 38 as a part of the answer? Now, that depends, guys. It depends on how the question is being laid down. If the question is laid down for 5 marks, I think he expects you to explain the concept of identifiability. It doesn't even take 2 minutes for you to explain the concept of identifiability. I think it is always better to mention the identifiability criteria and then conclude to say that the advertisement expenditure, marketing and promotion does not meet the criteria. Therefore, it is ineligible to be capitalized as an intangible asset and hence should be charged to P&L. I think this is a much more comprehensive way of answering the question than simply writing that advertisement does not meet the criteria of identifiability, therefore should be charged to P&L and is not eligible to be capitalized. Answer is correct. If you look at even your study material, he will write it like that only. But as far as the exam is concerned, the examiner is trying to explain or is always waiting to understand how much you know about identifiability there. So I would always recommend a student to write how much ever possible as far as it is relevant for the question. Now, if you start writing even recognition criteria, measurement criteria, just because you want to increase the size of your answer, I wouldn't say it is recommended. I wouldn't recommend you to write down all the recognition criteria, blah, 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 measurement, not necessary. Because the point here about advertisement expenditure is only about the identifiability. Talk about identifiability and stop it there. That is a much better way of writing the answer. Clear? Let's look at the next question. Question number 11. An entity is developing a new production process. During 2011-12, the expenditure incurred was 1,000, out of which 900 was incurred before 1st March. 100 was incurred between 1st March and 31st March of 2022. The entity is able to demonstrate that on 1st March, the production process met the criteria or to be recognized as an intangible asset. So all the expenditure incurred prior to the recognition criteria being met should be charged off to P&L. So out of 1000 rupees of expenditure, 900 incurred up to 1st March, the date on which you have met the recognition criteria, should be charged off to P&L. How much is eligible to be capitalized? 100. The recoverable amount of the know-how embodied into the process is estimated at 500. Guys, this recoverable amount is concept of IND AS 36. I told you I'll come back to that. But to the extent, remember that as far as your recoverable amount is less than carrying value, you will have to charge impairment loss. But if your recoverable amount is greater than the carrying value, no impairment loss should be charged. Here, what is the recoverable amount? Fine. What is the carrying value of intangible asset? Capitalized amount is only 100. 900 was already charged to P&L. Since recoverable amount is greater than carrying value, it is not eligible. There is no impairment loss to be recognized. During 2022-23, expenditure incurred is another 2000. 100 already capitalized, 2000 extra incurred, which is also eligible to be capitalized. At the end of 2023, the recoverable amount is only 1900. Guys, 1900 recoverable amount, carrying value is 2000 plus 100. Therefore, recoverable amount less than carrying value, impairment loss of 200 should be charged to the P&L. Clear? So let's start writing down the answer. Question number 11. Expenditure on research and development This is a research and development expense. Is eligible to be capitalized only if the recognition criteria is met. So here, what do we have to talk about? In the year 2021-22, in the year 21-22, the recognition criteria was met only on 1st March. Recognition criteria is met on 1st of March 22. Since it was met only on 1st March 22, the amount eligible to be charged to P&L expenditure charged to P&L is all that expenditure which was incurred from 1st April 21 up to 1st March 22. Whatever expenditure was incurred, it is eligible to be charged to P&L, which is 900. However, the extra 100 rupees which is spent after 1st March is eligible to be capitalized. Expenditure eligible to be capitalized starting from 1st March 22 to 31st March 22 during that year is 100 rupees. Remember guys, any product in process of development is not eligible to be amortized. It should only be checked for impairment. Intangible assets in process of development is not amortized. We have seen this. What else is not amortized? An asset which has an indefinite useful life. So these two assets are not eligible to be amortized, but should be checked for impairment. But it should be checked for impairment every year. Should be checked for impairment every year. Now let's check for impairment guys here. Now if I have to check for impairment, I have to compare between the carrying value and recoverable amount. Carrying value on 31st of March 22 is 100. On the same day, recoverable amount on the same day, 31st March 22 is 500. Since your recoverable amount is higher than the carrying value, then there is no impairment loss. Impairment loss to be recognized is around 0. Now, this is for the end of the year 2021-22, right? How much amount is charged to P&L, how much amount is capitalized, and then we have tested for impairment towards the end of the year. Now, if I come down to the year 2022-23, then what is the carrying value of the asset? Opening carrying value was 100. Capitalization in current year, capitalization of expenditure in 22-23 is another 2000. He is eligible to be capitalized another 2000 rupees. Therefore, the carrying value of the asset or at the end of 2023, carrying value of asset on 31st of March 23 is 2100. Compare it with the recoverable amount. On the same day, my recoverable amount on 31st March 23 was 1900. Since your recoverable amount is less than carrying value, it would result in an impairment loss of 200. Impairment loss charged to P&L. Have to charge to P&L the impairment loss of 200 rupees. Clear? This is my accounting treatment for the question number 11. Now, Let's come back to the next one. Let's look at the next question. X is engaged in developing a computer software. Expenditure incurred by X in pursuant to its development is 2 lakhs towards payment of salaries to program designers eligible to be capitalized. 5 lakhs towards cost of completing a program design. 2 lakhs towards cost of coding and establishing technical feasibility. So guys, technological feasibility was not established until I incurred that 2 lakhs. Therefore, until that point, whatever expenditure I incurred, 2 lakhs for salaries to designers, 5 lakhs towards program design, 2 lakhs towards cost of coding and establishing technical feasibility is charged off to P&L. 7 lakhs for other direct costs for after establishing technical feasibility, 2 lakhs for testing cost, cost of production masters for training program of 3 lakhs. These are eligible to be capitalized. A focus group of other software developers was invited to the conference for introduction of its software. Cost of conference was 70,000. It is only the introduction of a software not eligible to be capitalized should be charged off to P&L. On 15th April, the development project phase was completed. Cash budget was prepared. Net profit for the year was estimated to be 40 lakhs. How should X Limited account for these mentioned costs? Now, guys, until the period that the expenditure is, one second guys. Yeah, so until the period, the amount that technical feasibility is established, it should be charged off to P&L. So let's first start with that statement. Number 12. Expenditure on research and development is eligible to be capitalized only after technological feasibility is established. Technological feasibility is established. That means what? All the expenditure incurred until that phase should be charged off to P&L. Expenses incurred until technical feasibility is established is eligible, or it should be charged to P&L. Should be charged to P&L. So how much amount should be charged to P&L? Just check. All the expenditure incurred until the technological feasibility is established. Go back to the question and find out what are those amounts which should be charged to P&L. 2 lakhs paid to salaries for program designers, 5 lakhs for program design, 2 lakhs towards cost of testing and establishing technical feasibility. This 9 lakhs is eligible to be charged to P&L. Amount charged to P&L is equal to Let's pick up one by one. Until the technological feasibility is established, first amount, salary to program designer. Second one, salary to program designer is how much? 2 lakhs. Cost of program design, $2 lakhs. Sorry, not 2 lakhs. This is 5 lakhs. Another 2 lakhs was incurred at a later point of time, that is cost of coding. C, cost of coding, and establishing technical feasibility. And establishing technical feasibility, I incurred another 2 lakhs. Until here, the amount is charged to PN. What is the amount eligible to be capitalized then? The amount eligible to be capitalized as a part of the question is 7 lakhs paid as direct cost after technical feasibility, 2 lakh testing cost after feasibility. Now what about this one? Cost of producing product masters for training material. Guys, product masters for training material, it is only a training cost of the employees, not eligible to be capitalized. So the amount eligible to be capitalized will complete after testing. This 70,000 of introduction of the program, a conference for introduction of program, should also be charged off to P&L. So even these two should be charged off to P&L. 3 lakhs cost of producing training masters and 70,000 towards the conference for introducing the program. Part D, training masters. It's only a training cost. 3 lakhs should be charged off to P&L. Apart from that, one more cost which I have incurred is conference for introduction of the new product, which is nothing but your advertisement cost. 70,000 is again charged to P&L. That means the total cost to be charged to P&L total cost charged to P&L is 12 lakh 70,000. First we started with 2 lakhs plus 5 lakhs plus 2 lakhs 9 lakhs plus 3 lakh 12 lakhs plus 70,000 12 lakh 70,000. What is the amount eligible to be capitalized? Amount eligible to be capitalized as per Ind AS 38. I would only capitalize 2 costs as per Ind AS 38. The first one which I will capitalize is your development cost after technical feasibility. Development cost incurred after technological feasibility was established, I incurred 7 lakhs towards development. Apart from this cost, I also incurred another cost, which is my testing. Testing is a common thing, guys, which happens for any product eligible to be capitalized. 2 lakhs total amount eligible to be capitalized is 9 lakhs. 9 lakhs is the total cost which is eligible to be capitalized as per Ind AS 38. And that will bring us to the end of question number 12. Look at the next question. The next question which I am talking about is 13. Two small questions to finish off. X has started developing a new production process for the financial year 2021-22. The expenditure incurred until 30th September 23 was 1 crore. The expenditure on development of the production process meets the criteria on 1st July 2021. The records of X Limited show that out of the entire 1 crore, 70 lakhs was incurred during July to September. Okay, so that is after the date on which the recognition criteria was met. So this 70 lakhs is eligible to be capitalized. The amount incurred earlier prior to 1st July, that is prior to the date on which the production process met the recognition criteria, should be charged off to P&L. X publishes quarterly results. How should X record for the development expenditure? Simple question, guys. Number 13. The total research and development cost, writing in short, guys, R&D expense was 1 crore. Out of this 1 crore, I'll branch it out into two parts. Expenses incurred up to the date on which recognition criteria is met. Expenditure incurred up to the date on which recognition criteria is met. That means it is nothing but amount incurred up to 1st July. Amount incurred up to 1st July. Expenditure incurred after the 1st July up to September. Expenditure incurred after recognition criteria is met. Criteria is met. This is from 1st July up to 30th September. Up to 1st July, the expenditure incurred, I don't know, but after that, I incurred 70 lakhs for sure. Already given to me in the question. Total expenditure is 1 crore, therefore incurred prior to the date of 1st July should have been 30 lakhs. Correct? So therefore, what do you understand from this? This amount which was met after the recognition criteria, this was incurred after the recognition criteria is met, this is eligible to be capitalized. Eligible to be capitalized. However, this amount of 30 lakhs incurred prior to the date on which the recognition criteria is met, this amount should be charged to P&L. This is the treatment of the total expenditure incurred on research and development. Clear? Look at the last question from your workbook, guys. X decides to revalue its intangible asset on 1st April. on the date of revaluation, intangible assets stood at 1 crore with an accumulated depreciation of 40 lakhs. Intangible asset is revalued to 1 crore 50 lakhs. What should be X Limited account for revaluation of the asset in its books? So guys, 1 crore 40 lakhs of accumulated depreciation has been revalued to 1 crore 50 lakhs. Question number 14. My cost of asset is 1 crore. Its accumulated depreciation is 40 lakhs. Therefore, the carrying value on the date of revaluation, carrying value on, what is the date of your revaluation? 1st April, right? 1st April 21. On that date, the value was 60 lakh. Now, on 1st April when it was 60 lakh, it was revalued to revalued amount 1 crore 50 lakhs. That means there is a revaluation surplus of 90 lakhs. That means there is a revaluation surplus of 90 lakhs. What is your percentage revaluation then? My percentage revaluation on carrying value calculate, it is 90 divided by 60 into 100, which is nothing but 150%. 150% is your percentage revaluation of carrying value of the asset. How do I recognize the entry? There are two ways of recognizing the entry. I am first writing the first way. Method 1. Easiest method, cancel your accumulated depreciation to the value of the asset. Accumulated depreciation account debit to asset. How much is the accumulated depreciation out there? 90. Sorry. How much was the accumulated depreciation? I'm sorry. 40. 40. Let everything be in lakhs, no problem. Then the revaluation happens. Asset account debit, which is right now 60 as a carrying value after writing off your depreciation, has to be revalued to 150. Revaluation surplus account 90. Instead of passing an entry in combination of these two, I can also contrarily increase the value of the asset along with the value of accumulated depreciation, which is my method 2. Very similar in entries I have already passed even under IND AS 16 as well. What is the entry? Asset account debit. How much? Increase it with the amount of the revaluation. Actual value of the asset is 100 lakhs, increased by 150%. So the answer will be 150. 2. Accumulated depreciation. $40 was the accumulated depreciation. I am upward revaluing it by 150%. So that means the value would have been 60. Finally, my revaluation surplus is the balancing figure. Revaluation surplus is the balancing figure is 90. Done. So this is the answer. In either ways you pass the entry, your answer is absolutely correct. There is no problem in either of the methods. Both methods are 100% true and 100% will give you the same answer. Clear? And that will bring us to the end of our solutions on the workbook of IND AS 38. So we have solved IND AS 38 workbook. Now we'll have to look at what is the additional problems given as far as your RTPs, model test papers, earlier exam questions are concerned as a part of our compendium of solved illustrations, your module 6.